Welcome to the look ahead for Friday, the 19th of January, with me, Fiona Cincotta, Senior Market Analyst at City Index. So straight onto the earnings calendar. Tomorrow there is just State Street as the major earnings that we're watching out for. Then as far as the economic calendar is concerned, first up is German PPI data for December. This is expected to fall in December by 0.5%. Now, falling PPI bodes well for continued cooling in consumer inflation as well, but it also does perhaps highlight a weakening demand environment. Now, as far as the euro is concerned, not only have we got that sort of German data, we've also got ECB President Christine Lagarde is due to speak. She has been speaking on several occasions across this week at the World Economic Forum in Davos. And I mean, Christine Lagarde has been really pushing back against expectations of early rate cuts. She has hinted that perhaps there could be a rate cut in the summer should the data allow it. Now, the euro, if we just have a look what's been happening with the euro US dollar, we've seen both sort of the market rein in ECB rate cut expectations, but it's actually reined in much more Federal Reserve interest rate cut expectations, and that's resulted in a stronger dollar across the week. We've seen that playing out in this chart here. There's been quite an aggressive move southwards in euro US dollar across this week, particularly yesterday. Now, as far as the price is concerned here, we'll be looking out for further weakness in PPI. If that comes in weaker than expected, then that could see euro sell off further, because the market would start to think that perhaps this weakening demand environment, the prospect of further cooling in CPI, could see the ECB start to cut rates sooner. Now, as far as levels to be watching, the key level that euro US dollar is testing right now is that 200 SMA. That's at around that 108.40 level. If we see a breakthrough there, that's going to bring us towards 108 round number and 107.50, which was the low in December. It's also the 50 SMA. On the upside, the bulls going to be looking for a rise above 110 if they really want to get this, create a higher high and push above that psychological level. Now, just getting back to what's on the economic calendar, as far as UK is concerned, we've got UK retail sales. This week's been a pretty big week for UK data. We had UK CPI was out earlier in the week, and that was actually a surprise increase to 4%, which really supports the hawkish comments that we've had from BOE Governor Andrew Bailey, who has suggested that it's too soon to start talking about cutting interest rates. But if we do see that weaker than expected retail sales, it's going to start raising concerns about the outlook for the households or for consumers who are squeezed by high interest rates and still sticky inflation, which is still double the Bank of England's target level. And if we do see those concerns, recession concerns rise again, that would mean that maybe the Bank of England would need to start cutting rates a little bit earlier. But right now we're seeing the pound has been a little bit more supported than the euro or the Japanese yen, for example, against the US dollar. And that is because the broad expectation that the Bank of England is going to cut rates after the Federal Reserve or the ECB. On the chart, we can see that level there at the 126 is offered support again. That's basically the low that we've seen a couple of times hit at the beginning of January. We've seen a rebound off that level today, but that's going to be an area that sellers are going to want to take out in order to expose the 200 SMA, which is at that 125.50 level. On the upside, if we see sort of any sort of recovery, buyers are going to be looking for a move above 127.70. That's the 20 SMA in order to bring the 128 round number into focus. So what else we got going on tomorrow? We've also got Canadian retail sales. They're expected to come in at 0% against a 0.7% rise in December. Another big one to be watching out for the US is going to be US Michigan sentiment for January. It's expected to just tip slightly higher. Also going to be watching out for Federal Reserve speakers. Now, the data comes after stronger than expected US retail sales this week. That's strong data that's helped to fuel expectations that the Federal Reserve will not cut rates aggressively this year. And also, we've got Fed speakers this week who have also really pushed back still on those expectations of an early rate cut. So, if we get stronger data again tomorrow and more hawkish comments from those Fed speakers, then that could mean further strength for the US dollar. And it could be bad news for stocks. Now, it's been interesting, though, to see how US stocks have behaved. We've got the Dow Jones, which has it tried to move over the 37,800 level, didn't face rejection there. It's been trending lower. Now, we have had a little bit of support around the 37,130 level. That was yesterday's low. It's also been today's low. So, if sellers can take out that level, then they'll be looking for the 37,000 as the key level to watch. So if we get a break below there, then that brings the 50 SMA into focus. But if we do see any sort of recovery, buyers are going to be looking to get above the 37,800 level in order to be able to push that higher. So then the other one to be watching now, and we're just going to have to talk about, is the Nasdaq, which hit a fresh all-time high today. So although we've got those concerns over the Federal Reserve being a little bit less dovish than what the market was actually expecting, we've got this optimism surrounding AI, which has really helped drive the Nasdaq higher. So as I said, the Nasdaq, it's pushing up now. It's broken above that 17,000 level. Next level for the bulls is going to be 17,500. On the downside, you've got the 20 SMA at 16,700, which could offer minor support. Big level to be watching will be 16,175, which was the January low. I hope you've liked what you've been watching with me. If you have, then please remember to give me a like, or the video. And also, if you would like to receive more videos like this, then please do subscribe. Thanks very much.